Hey guys, what's going on? Going to take a quick look here at Cardano. Ticker for this is ADA. And right now I'm on a weekly time frame. A couple of things before I get into the analysis though. First, if you're not subscribed and you want to get notified when I drop new content, click subscribe, click the bell, and then click on all. If you don't do those last two steps, you're probably not going to get notified when I make the video, right? So if you want to see the content as soon as I release it, make sure you click the bell and then click on all. Also, if you want to please do trade Cardano and all the other coins I talk about on this channel, and you don't want to have to do KYC, you can head on over here. It's called BloFin, using the link in the pinned comment and description. And if you sign up using that link, it's going to activate some sign up bonuses for you. And as I mentioned in my previous video, since you may want to take profits on a lot of the coins that you may be holding in cold storage or whatever, likely next year in 2025, it's good to set up your non-KYC exchange accounts right now just to have them on deck. Because what these exchanges oftentimes do is when they do implement a KYC requirement, the people who are already trading on there and already have accounts, they kind of get grandfathered in and they either won't have to do it, or if the exchange requires them to, they give them several more months beyond the point where new signups would have to do it, okay? So if you want to lock in a non-KYC exchange account right now, once again, you can do that on BloFin. If you don't really care about having to do KYC and you want to just get sign-up bonuses on multiple different exchanges, I'll add a link to BingX and a link to Bitget as well. Both of those exchanges have a lot of volume, so you can check those out. All right, so let's get back to the ADA chart here. So again, I mentioned I'm on a weekly time frame. And the first thing you probably notice is they have these red boxes drawn on the chart. If you look back at my previous videos, I marked out where these potential resistance levels are going to be even before we made this move up here, right? So these levels are based on a confluence of previous price history. So for example, this first red box, if you look left, it starts from the top of these candle bodies right here. And I'm assuming the upper level is based on a Fibonacci pull, most likely the 382. Okay, now this red box in the middle, once again, it's based on Fibonacci and it's based on the previous price history, right? So if you look left here, obviously trading 101, previous support is likely going to be resistance on the way back up, and that's exactly what happened. So the low of these candle bodies is around 77 cents. That's where my box starts here, and then the upper region is around 82 cents. And then obviously the price that we're at right now, based on this price cluster right here, you see it was support, we broke below it, came back up, previous support flipped to resistance, and then we got this huge sell-off, right? So if you look today where the price is getting rejected, no surprise there, it is the resistance and support right here at around $1.21. Zoom in on that and you can see that we did trade above it briefly, but by the time this weekly candle closed, seller stepped in and this level held as a resistance. Okay, so while we may have penetrated this level on the daily time frame, we have not closed the weekly candle, and the weekly candle is the most important time frame in crypto in my opinion. Okay, so I mentioned the Fibonacci resistances. The way I saw these levels long before the price even started moving up, I take a Fibonacci, run it from the high all the way down to the low here. The low being this wick. Actually, I'll try and move it to get it more accurate right there. Okay, so yeah, these are the levels. The 382, where we got rejected for over a month right here. You see on every one of these candles, we had this long wick poking upwards, but this level was being heavily defended by the bears. Before the candles closed, people stepped in, sold, candle bodies closed below. And then of course, after about a month of getting rejected, we got a big, huge sell-off and pushed to the downside. Okay, when we finally cleared this 382, the next stop was up here at around the 50%. Actually, the 50% is about 83 cents, and we didn't make it up there. We got to about 80 cents or 81 cents, but the real rejection happened right here based again on the low of these candle bodies, which is why I have this drawn as a box. So it could be, it's a range, right? From about 77 cents based on the price action up to 82 cents based on the fib pull. The rejection here, we had a hard sell-off all the way down. We went from 81 cents all the way back down to 27 cents. That was probably scary for holders. And then just recently we had this impulsive move to the upside. And during this impulsive move, broke through both the 382 and the 50% Fibonacci, the previous levels of resistance, and we made it all the way up to this golden pocket resistance zone. And this golden pocket is the range between a 618 and a 65%. And again, of course, that lines up perfectly with the previous price history. So we do have a lot of confluence in this region. And then as I just showed you, we are getting rejected here. So you got to think about how to play this, right? So if you were just looking through the charts and you're looking for a short to mid-term trade setup, is this one I would personally take to the long side? Absolutely not. Reason being, well, we're just under resistance, and if I were to enter this trade, I'd have to place my stop loss all the way back down below here, and it would just risk too much, right? So it would be a very hard trade to manage. If we do get a bit of a sell-off, I'm not going to take the risk shorting this, but if we do get a sell-off and the price comes back down to, ideally I would want to enter this at about 77 cents, and I'll show you why. Okay, so I'm going to get rid of this fib pull, and instead I'm going to run a fib on this impulsive move, right? So this impulsive move, let's say it initiates right here, so I'll start it at the wick of this big impulsive candle, run it up to the top, and then the 382 retracement would be around 77 cents, which would coincidentally line up perfectly with the previous price history and where we got rejected from. So if the price does pull back to this 77 cent, about 77.69 cents, that's where I would expect a bounce, and that's where I would look to enter likely a leverage long position. Okay, so if I were able to get an entry there, it would be a much easier trade to manage. I can place my stop loss slightly below my entry point and below the top of these candle bodies. Be careful about wicks, you can always get wicked out. That happens quite often, so I would wait for at least a weekly candle close for confirmation. Place my stop loss below here, and then I would target at least back up to this golden pocket, but I would anticipate that if we do come back, bounce off here as support, and take another crack at this golden pocket region, I think we then break it, right? Because every single time here, after we got rejected from these regions, so we got rejected from the 382, pulled back, next attempt up, we broke all the way up to the 50%, got rejected, next attempt, we broke through both of them and came all the way up to the higher level. So I'm just viewing this as we're going to higher targets and we're just kind of stair-stepping our way there. Okay, so if we do end up breaking through this golden pocket, the next level of resistance, let's take the fib again, run it from the high down to the low here. Okay, we have a potential zone where sellers might come in at around $1.46, but the 786, the next Fibonacci up, is going to be around $1.74. So I would say anywhere between there, but most likely I would target the 786. Again at around $1.74, $1.75. Now, if you look to the 88.3, that's going to line up right with the top of these candle bodies. And you see that this not only was resistance here, it was resistance all throughout here as well. So that's going to be around $2.25. So maybe a little bit above that actually, say $2.30. So I would definitely mark that level on my chart. Another thing I wanted to point out here on the weekly time frame to be aware of, I mean, I don't place too much emphasis on indicators. I trade mostly fibs, price action, that sort of thing. But we do have the RSI in the so-called overbought region. But again, this indicator can remain in the overbought region for quite some time, particularly in a bull market. So I never base a trade just off this. But when you combine the fact that we are at resistance, this is in the overbought range, about to turn down. We have the stochastics that are also in this so-called overbought range, and they're just starting to cross down now. It just kind of confirms my stance that I'm not looking to enter a short-term long position right now, and I'm going to wait for a potential pullback. With that being said, I do have Cardano stored offline on a hardware wallet, and I'm not thinking about selling it right now, right? So for the sake of this analysis, I'm going to say that I do think Cardano is kind of destined for much higher targets, as are most of the altcoins. But short term, I'm not longing this. It's too risky of a trade. I'm going to be patient, wait for a pullback. If I don't get it, I don't care. I'm still holding some, so no biggie. I'll just look for a better trade setup. Okay, another thing, this Cardano chart is quite similar to the Algorand chart, which I reviewed yesterday. If you're interested in Algorand, you might want to check that out. It's just stair-stepping back up, responding to all the levels that I had previously marked, and this after breaking out of a long-term multi-year falling wedge. The only difference, though, between ADA and Cardano is that ADA, on this retrace, held support at the 50% Fibonacci. So to show you how I get that, I'll take a fib, run it from the absolute low here all the way up to the peak. And if you look right here, we have the 50% Fibonacci retracement. And this is where we had pretty much a triple bottom, right? We came down here, bounced off of it, came down again, bounced off of it, and again, actually 4 times quadruple bottom right here. So this 50% Fibonacci retracement held since December 2022 all the way until October 2023. So 1 year of support right here. Whereas on the Algorand chart, the price fully retraced back down to the starting point. It came all the way back down, and now it's making its way back up. So because Cardano has a more bullish price structure and it held support at the 50 rather than doing a full retracement, I could really see this one breaking new highs. Not that I'm saying Algorand can't, but just for entertainment's sake, let's take a look at where this coin could go in this cycle. Although it already has a very high market cap, but just for fun, let's look at some projection targets using the fibs. So we have the 127, that's $6, and then beyond that the 1618, which is more often than not, once the price breaks the previous high, this is kind of where it ends up. If things get really bullish, we can hit over $15 on this, which again would take the market cap to a crazy amount, but that happens during altcoin seasons. It's hard to justify a lot of it sometimes, right? It's just money moving from coin to coin, and if it comes up to $15, it's not like I expect it to hold this market cap for long. It's going to come up, maybe hold it for a few weeks, and then it's going to dump like all the other ones, right? So it's just the flow of money in an altcoin season, so you never know what to expect. It can really surprise you. And of course, for those fibs, I'm using the logarithmic scale, but the reason why I'm doing that is because, as I just showed you, those are the fibs that the price has been responding perfectly to, right? So why would I not use that for my projection targets? Anyway, guys, that about wraps it up. I think this video is getting kind of long, so if you found it helpful, smash the like button. If you want to get notified when I drop new content, make sure to click subscribe. And again, if you want to have an account on a non-KYC exchange, check out the link in the pinned comment and description. Using that link is going to get you a bonus. And if you want to make multiple accounts, I put a link to a couple more exchanges in the pinned comment and description as well. All right, guys, take care. Have a good day. Bye.